Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. There's a government shutdown coming. A lot of people think that the dollar is going to be hammered for that, but we're going to show you something quite the contrary. You're not going to want to miss this. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
So Bob, every other day, dollar's dying, de-dollarization, BRICS are gonna, shun the dollar, America's screwed. But, the data, if you really dig into it, is contrary to those themes that seem to be running around the interwebs lately.
Yeah, I mean, people don't understand correlations at all. So we're going to go into a shutdown. It seems almost certain now that we're going to have some sort of government shutdown in one way, shape, or form. Let's just set the chance of default aside for a second. The minute we do that is that the government is essentially funding itself. When the government funds itself, it's not producing more dollars, okay? So in that situation, what we have here is we have a strong dollar fiscal policy happening. And the data shows that every time we've done this, the dollar has gone up over the next 100 days. And remember, everybody wants a weak dollar, but a weak dollar would crush the BRICS, number one. Number two, a weak dollar causes havoc, in this country, but a strong dollar causes havoc in our stock market, because it drives down the cost of commodities. And so when we're in this situation here, and we're leading up to the big story that we're going to do regarding the funding, is that you have an environment here now where stocks are priced perfection going into a recession. We're going into a recession, and we're going to shut the government down. That is as bullish dollar you can get. It's as bearish commodity. And in these situations, strong dollar means weak Bitcoin. It means weak industrial commodities. It means weak precious metal commodities. And the only complex that actually does well with a strong dollar is energy. But this is coming at the same time energy is coming to the end of its seasonality. So we're not sure how much of an impact it's going to have with the strong dollar, even though the strong dollar and oil tend to go together. And just to show you the chart is telling us it's setting up too. So Phil, do you want to throw that chart over? So that's the Dixie DXY. And if you look down at the middle chart, that is basically the directional movement index. And it's just showing you here that the selling, it looks almost like a falling wedge, does it not, Phil? Is abating. It's decelerating. When we look to trade things, and if you see a deceleration of the trend in what we would call a hot channel, meaning a channel that is essentially rising, is that you look for areas to buy, okay? And the bottom chart, that's our heat index, which really shows us momentum to do we get into a trade or not? It's not necessarily a buy signal, but it's telling you that you should look. And so you have a trending up market. Okay, you have deceleration in the index that's of the direction of the trend, and then you have a momentum change at the same time with a higher low and a double bottom to boot, Phil. So now you have to start looking at it trying to cross over that first pink line that's a little bit higher. That's the last resistance. And then after that, Phil, man, it goes all the way to the top of the channel again. And I don't see weakness in the dollar. I just see a consolidation and a rising channel. What say you?
Yeah, I think that everyone's looking for a breakdown, but I think actually it's basing at 100, around psychological level of the index. And it's not breaking down. So what I would say is that watch for strength going into next week. And then in the following weeks, if we start breaking over that 105, that basically that swing high where that red line is, I don't see why we can't start to gun and attack the previous swing highs from last year, which is basically what the lows of the markets were. So those are very key levels to me, but I think this is a bullish setup. I hear a lot of bearishness, and I just think that they're basically getting bearish at the bottom of the pullback. And for me, when you have multiple weeks that kind of go sideways like this, and then you have this green weekly candle that's popping up, I always view that as bullish, because to me that's a basing pattern, and those are the ones that hold for a larger move, usually 9 times out of 10, Bob. So I think this is a bullish setup here.
Yeah, look, if the channel was falling and we did this, then you look for failure. But the channel's rising, and so usually 80% of the time you get a rising channel, and we're over the 144. See that black line, folks, below price? That's a very, very important moving average. It's 144, and that's another tell. So the dollar's in bull mode. Okay, so the bears have to prove that they could take this price down. If not, price is going higher. And just once again, for people who think the BRICS are going to dominate the reserve currency in the world, is that just ask yourself, who wants to hold any of those currencies in their treasury account long term? And nobody's going to tell you they will, okay?
Yeah.
Because those guys are masters. They make the United States look positively German in our fiscal approach, okay? These guys they'll shed currency like there's no tomorrow. You want to hold Brazilian real, or Argentinian pesos, or South African rand, right? Or Chinese renminbi. The only currency I would hold would be Russian rubles. And I'd only hold those if oil can stay over $60 a barrel, which, is going into recession, that may be suspect. Okay, so there's no currencies that are out there that are going to challenge us. And the United States, if you thought the United States was worried about their dollar collapsing, there's a gazillion things that we can do, okay, short of a war, that would just turn these people upside down. So just get that out of your head. The most important thing is, how are we going to profit from this move? And the profit is being cautious. And we'll talk more about that as we get closer to the debt ceiling crisis, Phil, because if they resolve it, we have one way we're going to trade. If we go into this protracted negotiation, we're going to trade it a different way. So that's why we're not really committing yet. We have to see which is the chicken or the egg coming first on this one. But either one of them are negative for the market. So just stay tuned on that. But we'll be covering that over the next 2 weeks. With that, Phil, that's all I have really for today.
Yeah, I think that's spot on. And for those that think that China's big enough to be the reserve currency, they don't want that role, because they're an exporter economy. And you guys, if you don't understand exporter economies, I suggest you do some homework on that, because what you'll find is that those exporter economies, they want to be able to move their currency around. If you really look day to day, they're constantly doing pinning operations on the yuan, and it's vital because of their nature of their economy. So they don't really want that role. Again, it all plays into basically what they are, and that's an exporter economy. And that's why ultimately this whole BRICS de-dollarization notion really doesn't fly. And to agree with all of Bob's points on that, ultimately the DXY is just going to remain the reserve currency for the foreseeable future.
Yeah, no, I just want to get a thought in before we close, is that China would have to open up their currency to their capital controls.
Right.
The minute China opens up their currencies, about 3/4 of their currency will leave the country.
That's
People
right.
get out of there faster than you can say blink.
They know that.
What's that?
And they know that.
They know that. That's why it'll never happen. Do you know how many rich Chinese families have money already here in the U.S.? They open up that thing. They're shoveling money out of that country faster than you can say blink. It would be a horror show for China. So it'll never happen. So I don't worry about any of this stuff. It's a joke. It makes people feel good because we're pissed off at the deep state, as we should be. But this is not going to be the result of it.
Yeah, and ultimately you don't want that anyway, because your quality of life would suffer too. If you're talking about seismic, just galactic changes in the way that things are done, and it's very chaotic. If you go through history, when we have big changes like that, and what the reserve currency is that runs the world, very chaotic time. So you really, at the end of the day, don't want that. But like Bob said, you kind of want to see justice served in other ways, just not the reserve dollar status. All right, guys, well, that's going to do it for this episode. Let us know your thoughts below. Thanks for watching. Please hit like and subscribe, and smash that notification bell and set it to all if you could. And we'll see you on the next episode. Take care.
Trade